Hi, everyone, and welcome back to the weekly MMA Cycles Market Update. This is Gianni DePoce, your host, and today is the 10th of January, 2024. So it's time to review what's going on geocosmically as well as the market. So let me go ahead and share my screen. We can start off with the Dow Jones, which has been consolidating near its all-time high, may have completed an important cycle low in one of our critical reversal periods earlier this week. Overall, I would view the price action as constructive. We are getting later in some longer term cycles, which puts us on alert for a, pullback of significance at some point this year. But for now, I think bulls are in pretty solid control of what's going on in this market, and it should be, approached accordingly. Let's go ahead and take a look at the NASDAQ. Earlier this week, we had the Sun trine Uranus. Uranus rules tech, rules breakouts, but we low completed a couple days before that signature. Now, later this week, we have Mars trine Jupiter, and then next week on the 19th, we will have Venus square Neptune. And that may be important for energy markets and currency markets, but obviously the big signature that everyone is watching in the near term is the conjunction between the Sun and Pluto. They both ingress into the sign of Aquarius on the 20th of January, which Saturday, and could have major ramifications for tech and the whole AI craze, which is a major driver of this rally in equities. So we completed a higher low here. That looks bullish, and now we need to see if we make a new higher high. If so, it would reinforce the existing uptrend and keep bulls on firm footing. So I do want to pivot over to interest rate markets now, taking a look at the yield on the 10-year Treasury. Tomorrow we will have important inflation numbers, and there's so many rate cut, expectations baked into the market already. So I think we'll be wanting to see further evidence of inflation slowing, especially with the job market staying as strong as it's been. This would probably keep interest rates on a downward trajectory, and as Ray and I discussed last week, is good during an election year for the party in power, so to speak, to try and make housing affordable again. So that's what's on our radar again. And when I say housing affordable again, it all comes down to the payments. Obviously, when interest rates on the 30-year mortgage are above 8%, it's a lot more expensive to buy a home than it is when interest rates are in the 5 to 6% range. So we see that after we completed a long-term cycle high in the 10-year yield here, we've been trending lower over the last few months, and the weight of the evidence suggests that we could still continue lower. I do want to take a look at the euro briefly. So, it's really just consolidating its losses over the last couple of sessions. We modified our primary cycle labelings in our weekly report recently, and that would have this low in October be a primary cycle trough. So, with Venus set to square Neptune next week, I think we have to keep a close eye on currency markets. Could be some, delusional expectations, perhaps with Neptune involved, on what the trend really is in currencies. I do want to take a quick look at gold. We're going to use GLD as a proxy. I do think, as Ray and I discussed last week, that we are still on our way to a primary cycle low in the next couple of weeks. So we'll have to be on the lookout for that. And, we talk about our price objectives, obviously, in the daily and weekly and monthly reports, which, by the way, this is a MMA monthly weekend, meaning that Monday and Tuesday next week, we will be publishing our monthly cycles report, the flagship report. Over 40 years in publication, I think now, 42nd or 43rd year. We just started a new year. So I know it's over 40 years. And it's amazing that we're once again have another year to add to the catalog. And let's talk about Bitcoin here, because a lot of fake news circulating. Yesterday we had the SEC X or Twitter account hacked, and apparently, well, the news was that they approved the Bitcoin ETF. But apparently that was a hack, and that wasn't the case. So Bitcoin initially spiked on the news. And interestingly, the futures market rallied up into our upside target in the $48,000 to $50,000 area. Cash only hit 47,932. So, that may have been it. We have a pretty wide case of bearish oscillator divergence here. We're in the time band for a high. I'm a little more optimistic on Ethereum now, but for all intents and purposes, we have covered all of our longs in the daily report, especially, and have been standing aside in Bitcoin. So this is where we stand now. Now we see if the prices can stabilize and perhaps we have one more leg higher. But if not, then I think Bitcoin probably will be declining into its 15-month cycle low due in the next 2 to 4 months. So that could put us on the defensive when it comes to the crypto space, and it's been such a good leading indicator for equities. It could forewarn of issues down the line. I do want to take a quick look at crude oil here. It's still I would consider in digestion mode, not really much to update. We do run the risk of a long-term cycle culminating here, and that could take prices even lower, but the decline is stabilized at this point, so we'll see if Venus square Neptune can give us a better sense of direction next week. But those are all the charts that I wanted to review with you today. So thank you so much for watching. We will be back the same time, same place next week. And again, as a reminder, it is the monthly cycles report will be published on Monday and Tuesday of next week, where you can see all of MMA's analysis on stocks, bonds, commodities, and currencies, and our latest takes on what's happening in that space. We also will have year 2 of the Merriman Market Timing Academy starting on the 20th of January. So definitely want to keep us in mind if you want to learn our market timing methods, and you can find all the details about that at www.mmacycles.com. So that's all for now, everyone. Thank you for watching, and we'll see you next week.